Hello everyone, welcome to this session on money laundering and terrorist financing. Most of you have heard about money laundering and terrorist financing being the one of the two large crimes or the two more heinous crimes which are economic crimes which are committed. Now in this session let's try to understand what is money laundering, what are the implications, what are the different stages of money laundering, and what are the consequences of money laundering. We also will look in what is a terror financing, what are the different stages of terror financing, and what are the implications of terror financing. So let's start it with money laundering. So what is money laundering? Money laundering is a process of converting illegal money or illegitimate money into legal money or legitimate money. Now, why does an individual or a company or an organization have to indulge in money laundering? Simple. It's because they have obtained a large amount of money through illegal activities or illegitimate ways. So these individuals who have actually obtained the money funds through illegal mechanisms or through illegitimate sources try to portray that this money has been obtained from through a legitimate or legal sources and thus indulge in money laundering. So basically, to summarize, what is money laundering is, it's a process of converting the illegal money or illegitimate money into legal or legitimate money. What are the three stages of money laundering? Now, money laundering happens in three stages. The first stage of money laundering is placement. What happens in the placement stage is the illegal money which is obtained through illegitimate sources has been introduced into the financial system. That is stage number one. We call this as a placement. Now, the second stage of money laundering is layering, where the individual will try to conceal the source of money and they involve in series of activities. This stage we call this as a layering stage. And third, we have integration, where a large amount of transactions are done to give this to show that as if this transaction has been done using a legitimate money. Now, typically, money laundering has three stages of placement, layering, and integration, and these are circular in nature. Means it's a continuous process of activities which has been taking place. Now, let's look into detail what is a placement, what is a placement activity, and how does the placement activity actually done. Now, placement is the first stage of money laundering. Now, what happens here is the money which is been collected through illegitimate sources is introduced into the economy or financial system. Now, the easy and the most simplest way of introducing money into the financial system is through banks or financial institutions. However, there are also other methods which gets involved. Now, let's discuss some of the other methods of placement. First, we have structuring. What is structuring? So, structuring is basically, if an individual, let's say, want to deposit around like $10,000, more than $10,000 in US, they need to provide their income proof, any income proof document they need to provide, and the banks will report any cash deposit which is done over and above the threshold of $10,000. So, the individual does not want to get reported by the financial system or a bank. What he does is, he breaks down the larger denomination of 10,000 into smaller denominations. Let's say he breaks into like $4,500 or $7,000 or around like $8,000 and introduces the money into the financial system. By this way, he did not get reported by the financial institution or a bank. So, this method of introducing money is called as a structuring method. Next, we have smurfing. Smurfing is the method which is actually used. The smurfing actually what exactly means is, the concerned party will use the third party account. For example, could be a friend, or could be a relative, or could be another person through whom he will introduce the money. So, the money gets deposited into the third party's account, and initially the money gets transferred to the concerned person account. So, this method is what we call as a smurfing method. Then we have a wire transfer. So, wire transfer is largely used in the layering stage, and it is very less used frequently. It's not frequently used in the placement stage. Then we have insurance purchases, one of the ways where the money can be introduced into the financial system. So, basically, the concerned person, the money launderer, will purchase insurance policies, for example, like a unit-linked insurance policies, and by paying a cash or buying any other insurance policies and paying the premium through cash. So, this way he can actually convert his illegal money into legal money. Another very famous way of actually doing is gambling. they when the concerned person go to the casinos or any other gambling activities, and where what he does is he tries to purchase some gambling coins or for a casino coins using the cash. So these are some of the methods through which the money gets introduced. So this is the first stage of money laundering, placement. Basically, it is where the money, illegal money, introduced into the financial system or economy. Now let's look at stage number 2. What is stage number 2? In stage number 2, it is layering. In the first stage, the money gets introduced into the financial system or the economy. In the second stage, the money launderer does not want the authorities to know that this money actually, they do not want to know the authorities the source of money. So what the money launderer does is he indulges in layering activity. Now what do you mean by layering is there are series of wire transfers have been done to conceal the original source of money. For example, the person, let's say Mr. A is the money launderer, he does a transfer of money from his account to Mr. B, and Mr. B is transferred to Mr. C, and Mr. C transfers to Mr. C, and like this it's keep on processing until the money reaches to Mr. X or Y. Then finally Mr. X or Y will transfer the money back to the Mr. A's account. So this is what we call as a layering, where a series of transaction actually takes place. This is basically done to conceal the source of money. Now some of the methods of layering can be, they can transfer the funds. Now the funds can be transferred within, it can be a domestic transfer, means the transfers can take place within a country, specific country, or that wire transfer can take place through a foreign exchange, through a foreign exchange transaction. Let's say a money laundering happens in US, the money gets transferred to UK, and from UK it gets transferred to Australia, from Australia it gets transferred to another Gulf country, and finally it actually comes back to US. So this way money can be transferred from one destination to other destination. So this is some of the layering techniques. The third stage of money laundering is integration stage. Now what happens in integration, right? The first stage, the money was introduced. Second thing, they do series of transactions to conceal the source of money. In third stage, a large amount of purchase or a legal transaction will take place. The idea behind the integration is to show that the money, the transaction has been done using a legitimate or a legal money. Normally, the transaction like purchase of real estate or purchase of diamonds and other precious metals, or the money launderer will actually purchase some artifacts or paintings through auctions. So these are some of the methods which has been used for integration. So and as we discussed, the money laundering happens in 3 stages with the placement, in layering and integration. So this is about money laundering. Now let's look at what are the adverse consequences of money laundering to a financial institution. Now if you read recently, right, many banks, especially in international banks or investment banks, has been penalized by the money laundering or terrorist finance regulator for non-compliance. Now the fines ranges for billions of monies to, like for example, recently one of the famous investment bank paid close to about like $2 billion as a fine for non-compliance of AML and KYC activities. So every financial institution have to face major consequences due to money laundering and terrorist financing. Now let's look at some of the consequences. What are the consequences for non-compliance of AML or KYC rules? First, it's a reputational risk to the financial institution. Now when a financial institution comes into limelight through a news mentioning that this bank is not compliant with the AML or KYC policies and have been punished by the regulators through fines or series of other methods, it becomes a reputational issue for them. Now the customers who are having relationship with that bank will be worried about what will be the worry about their money. So it's a first, there is a reputational risk to the bank. Second, there is a operational risk. Now operational risk, this anti-money laundering and KYC process involves too many operational works, means too many operational works. Any non-compliance, they need to spend additional time in actually finding out what actually went wrong with why the money laundering or terrorist financing were not able to detect. So the organization also gets into operation risk. Third one, there is a legal risk. Legal risk, once the money laundering, if a bank or a financial institution gets into money laundering, they have to face the regulators charges. So that to prove that one, they have to spend a lot of legal, they have to spend money on fighting these legal cases in the court. So it involves a legal risk. And lastly, it is the concentration risk. Concentration risk is if the money laundering happens, or the money laundering or terrorist financing happens for a large amount of money, it also leads to a concentration risk. So these are some of the consequences which are of money laundering, which is faced by the financial institutions. So far, we have seen what is money laundering, what are the three stages of money laundering, and what are the consequences of money laundering. Now, let's look into another major crime, which is terror financing. So, basically, what is terror financing? A terror financing is a process of providing funds or financial support to terrorist organization. Now, these are terrorist organizations are those organizations which actually been banned by the government due to their illegal activities. Now, any individual or any association like an organization or an NGO who actually provides support to them by either by finance or non-finance, it is considered to be a terrorist financing. Now, similar to the money laundering, the terrorist financing also has three stages. Now, let's look at what are these three stages. The three stages of terror financing are collection, dissemination, and usage. So, what is collection? So, basically, the collection stage is a raising, means where the money is pooled or the money is actually raised. Now, terrorists or terrorist organizations require large amount of money to carry out the disruption activities. So, for that they require large amounts of money, and this money is actually raised. Now, this is the first stage of terror financing where the money is raised. So, money raised by them through various means. For example, it can happen through illegal activities, or it can also happen through like legal activities. Like, for example, they can collect this money through charity or from donations. So, this is the first stage. First stage is where the money is actually raised, or money is raised and pooled. The second stage of terrorist financing is the moving of funds. Dissemination is what we call as a moving of funds. Now, what happens, right? The money gets moved from one country to other country, or from one region to other region. Now, there are variety of methods which is actually carried out through which the money is actually moved from one location to other location. For example, there is a cash smuggling. Cash smuggling is where traditionally there are persons who will actually carry the cash from one place to other place. We call this as a cash smuggling. Second is there can be a traditional or a money changes. Money changes are individuals who operate on a hawala basis, means that they do not keep any record, and they help in moving money from one country to other country, or from one region to other region. Let's say, for example, the money changes are, there is an individual in India who want to actually transfer money from, somebody wants to move the money from Middle East to India. So, this person will will help in transferring money from one country to other country. Then we have the so-called underground bankers. Underground bankers are majorly hawala operators who do not keep any record of their financial transaction, but actively involved in transferring and dealing with money. Then we have the most famous way is like using charities. Charities through organizations like NGO, non-government organizations, or NPOs. Through the face of charity, the money moves from one country to other country, or from one region to other country. So, these are some of the methods through which money moves from one location to other location. Now, the third stage of money is distribution. Now, distribution basically happens where the money gets distributed from ultimately where it reaches the beneficiary or beneficial organizations like a terrorist organizations. So, these are basically the three stages of terror financing. Now, as a KYC analyst or AML analyst, when you are actually dealing with the client, there are some indicators which you can look at. So, it will look like these are some of the indicators of terrorist financing. For example, the person will be the person will be used as the account will be used as a friend person, but they have some suspicious transaction. So, if you can look at what are the activities or funding they get from one country to other country, you can find out like what is the nature of the account, for what is the business, what is the nature of intended purpose the account is open. Second thing is you can look at the name or the name of the individual organizations, like it is published as a part of the terrorist organization in the past, or this means every country publishes the list of terrorist or terrorist organizations, and One clue is that you might find this individuals or organizations name in that list. Then there is a another major indicator is like there is a frequent large cash deposits is happening in a NPO account or a NGO account. Now, if there is any NGO or a NPO which is registered which is having a relationship with the bank, and if there is a frequent cash deposits happening in this one, that's an indication that it is could be a terrorist financing source or money laundering. Or you can another important thing is you can see a high volume of transaction. Volumes are normally it is beyond their customer accepted level, right? And there is a very clear the indication that there is no relationship between the customer and what is the intended nature of this doing business. So these are some of the indicators you can find out. You can find this is where you can find out about the money laundering or a terrorist finance. Now, let's look at what are the key differences between money laundering and terrorist financing. Though money laundering and terrorist financing appear to be similar or a unique, there are differences between them. So in this slide, let's understand what are the differences between money laundering and terrorist financing. One, the cash or the assets obtained through money laundering is always from a criminal act. Okay, but for a terrorist financing, the cash or asset which is obtained can be from legitimate or a illegitimate source. Okay, for example, if the terrorist organization collects the money from individuals out of this through donations, it can be a legitimate source. Second is placement. So normally how the placement happens in money laundering is they use financial institutions and they use methods like structuring and smurfing to place the money into the financial system. But for terror financing, normally it is done through collection where the asset is deposited either through a financial institution or they use the money changes to deposit this account. Second is layering. Layering of funds for money laundering largely happens through financial institutions, but for terrorist organization, it might or might not happen through terrorist organization. Now, it might or might not happen through banks. Then integration. Integration is in money laundering, the integration happens through purchase of large amount of assets like luxury assets like diamond, yacht, or artifacts, painting, etc. But in case of terror financing, the integration is largely happens through distribution. Motivation for money laundering, the motivation is making profit, and for terror financing, it is ideology. So they do not have any profit motive, but they are more about ideology towards a terrorist organization. Now, source of funds, as we discussed, source of funds for money laundering can be money laundering is always illegitimate, but for a terror financing, it can be legitimate or legitimate. Now, conduits normally how they move money, right? They prefer means the money launderers prefer financial system or financial institution to carry out their activities. However, terror financing, they prefer the cash couriers or money changes. So detection or focus. Now, how you can detection is money laundering can be detected through unusual transactions or suspicious transaction, whereas terror financing can be detected through unusual or suspicious relationship what the customer is having with the bank. Now, transaction amounts, usually for money laundering, the transaction amounts are large in nature. However, for terror financing, it will be smaller in nature. It is not high as compared to money laundering. Now, financial activity, money laundering financial activities are very complex as they involve in layering. A series or layers of transaction will be carried out. But in case of terror financing, they keep it very low profile and do not want to conduct too many transactions in the financial institution. Now, money trail, how the money moves. In case of money laundering, it's pretty much circular, means it starts with the placement, goes to a layering, and finally ends with the integration stage. But for terror financing, it is more of a linear, means it just starts with the collection, then it gets distributed. So these are some of the differences between money laundering and terrorist financing. To summarize, in this session, we had a look at what is money laundering, what are the stages of money laundering, what is terror financing, what are the different stages of terror financing, and we looked at what are the key differences between money laundering and terror financing. Thanks for your time.